Market on close. I'm Marley Caden here in our Chicago headquarters alongside Sam Vadas on the floor of the New York Stock Exchange. It's time now to turn our attention to the industrial sector after Deere's earnings earlier today. Joining us now is James Demmert, founder and chief investment officer at Main Street Research. James, thanks for taking the time to be with us. A lot to take in from this Deere report that we got today. I'd love to get some of your key thoughts that you took away.
Yeah, happy holidays. And I think this is a microcosm of the industrial sector. It's sort of, if a company misses, they take it out to the woodshed, which is what they're doing with Deere today, down 6%. They missed estimates. I think most importantly, they really guided lower for the full year, and investors just don't like that. And it reminds me of the Home Depot story, which was a week or so ago, which also got crushed when they missed numbers. And it just tells us this U.S. market is super narrow. If you're going to be in the industrial sector, you got to be really careful. And one of the things they talked about on the call was pressure from tariffs. The industrial stocks are going to have that. And the ag business itself is quite challenging. So it's a very globally oriented company. Tariffs, I think, are starting to seep in. Investors might want to look at that going into 26 in the industrial sector. Industrial sector in the U.S., not as attractive as it is outside the U.S., which we can always talk about.
I want to talk about that just quickly. I know you've got a couple of other stocks and ideas on your radar, James, but just tying it back to what Deere had to say. I mean, if you're an investor looking to be exposed to some of these names which do have a sort of more global footprint, I mean, how should one be looking at some of the geopolitical tensions? Because, I was having a great conversation with CFRA earlier today, and they were looking at, obviously, the US-China relationship, how much as far as China is buying on the soybean front. That's important to keep tabs on. But, I mean, what should people be looking at in order to sort of gauge the level of risk involved here?
Well, the industrial sector, thankfully, has a lot of subsectors. One of them that we like is the defense sector. So we talk about geopolitics. It's been a great call to be in the defense sector. We think it continues to be. And there's companies like Lockheed in the U.S. and all kinds of them. So I think that's a great way to play it. Obviously, a Home Depot, maybe not a Deere because of the challenges. And think about it. Deere trades at 24 times earnings. That's a pretty steep multiple for a company that's not even growing at 20%. So I think investors, when you go to the industrial sector, particularly in the U.S., you want to find price earnings ratios that are less than growth rates. So there's value. That'll protect you if the company happens to miss, which obviously is the case with Deere.
And James, staying with Deere here before we move on to some of the other opportunities here, management came out and said that they see 2026 as the bottom of this large ag cycle. Do you buy that timeline?
I don't. And I think that investors should be very wary of that. That's a difficult one to predict. And I think that, we have to remember, particularly in the United States or overseas, it's a bull market in a lot of things that have a lot of predictability. And I think calling the ag business turning is a tough one. I would rather make calls on something that has a little bit more logic to it and maybe a little bit more timing. So I don't buy that.
All right, let's just talk about what else is sort of on your radar at the moment. Interested to pick your brains about Siemens, obviously a German company with a lot of exposure also to China. Just run us through sort of the investment thesis here, why you're looking at a name like that.
Well, what's interesting, Sam, is that the overseas markets are rallying, twice the return of the U.S. market. I think investors haven't really woken up to that. And those rallies in overseas stocks are very broad. So we just start from a top-down picture. And then if you say to yourself, well, I want to own an industrial company outside the U.S., Siemens really comes up to play because it's one of the more diversified industrial companies in the world. They do a bit of business, of course, in China, but their relationship with China is not as, I would say, difficult as ours is in the U.S. So they're not having the kind of problems we have in the U.S. But also these European markets have a lot of fiscal spending coming their way since the U.S. withdrew. And that's fueling those economies and their earnings and Siemens stock. And I think that's why foreign markets are doing better than the U.S. So Siemens, here's another thought. Trading at 14 times earnings is a pretty compelling value as we go into 2026. So we think the Santa Claus rally is for real, but it's going to be a global rally into the end of the year.
And James, how about other opportunities internationally in Asian markets or elsewhere? Is there anybody else that you like?
Yeah, we happen to be a global manager, so this is kind of right in our backyard. We love Hitachi here, maker of all kinds of industrial equipment for electrical and telecommunication services. Again, a stock trading way less than its growth rate. And let's face it, a lot of investors have been neglecting foreign stocks up until maybe this year because the S&P 500 was sort of the only game in town. But with the change in the administration and the change in the macro, that's why foreign stocks are doing better. Hitachi is a great way to play that as a Japanese big cap name. We think a lot of investors are going to start to reallocate to foreign stocks when they get the FOMO of how well they've done relative to the U.S. So big name companies like Hitachi, the Siemens, lots of other ones, we think are going to have a great rally in 2026.
Yeah, certainly some interesting names to sort of look at as we do look across global equities. As you mentioned, it has been an outperformance across Europe, across Asia. I mean, I know that US investors do like Japan. We've got that Takaichi trade that's been priced in right now as well. So certainly an interesting name and a very compelling valuation, as you say. It's inexpensive relative to what we're seeing in some of these US stocks. Have a great holiday. Wish you and your family well for this Thanksgiving. James, thank you so much for joining us. We'll speak to you next week. James Demmert there, Main Street Research.